So hello everyone. In the previous video, we studied about the value added method. Now in this we will study about the income method. Okay. So what is income method? According to this method, the national income is estimated in terms of factor payments. Okay. The factor payments or the factor income made during an accounting year. So all those incomes will be added together and we will get NDPFC, okay, or we call it domestic income. Okay, so but we have to calculate national income. So as I said earlier, we have to convert domestic into national. So what is the formula here? From if we have to go from domestic to national, we will add NFIA. Okay, so the result, the amount which we will get after adding all the incomes, we will get NDPFC and we will add NFIA to that so that we can obtain national income or NNPFC. Okay, so this NDPFC, it is also called domestic income and NNPFC is called national income. Okay, so there are three ways by which we can calculate the income. First is compensation to employees, second is operating surplus, and third is mixed income. Compensation to employees means the income of those people who are working, okay, who are working in a company or in any organization. Okay, and what is operating surplus? The businessman, the person who is running a company, his income will be added here in operating surplus. Okay, and what is mixed income? Small owners of a company, not company but a shop, a self-employed person will be counted in mixed income. Okay, so first we will see about the compensation to employees. Here, suppose a person get a salary of a person is 40,000 rupees. Okay, 40k. Now this 40,000 can be given in three forms. This 40,000 rupees can be given in three forms. First is in form of wages, in form of cash. Okay, so out of 40,000, the person is getting 30,000 in form of cash in his account. Okay, now the remaining 10,000, out of that 10,000, 5,000 is getting in form of kind. Kind means in form of any facility or in form of any service like medical service, medical facilities, or housing facility, or petrol expense. So in form of these services he is getting his rupees 5,000. Okay, now the remaining 5,000 he will get in form of social security, means the remaining 5,000 will be added to his provident fund account, and after the retirement he will get the lump sum amount from that fund. Okay, so this 40,000 is divided into three parts: in cash, in kind, and in form of social security. Okay, so these are the forms in which a person get compensation, an employee gets compensation. Okay, now the next thing which we have to add for calculating national income or NDPFC is operating surplus. Okay, now this operating surplus will be divided into two parts. First is income from property and second is income from entrepreneurship. Okay, what things will be added? This rent and this interest will be added in income from property. Okay, and what other things will be added in income from entrepreneurship? This dividend, this corporate tax, this retained earnings. So if a businessman is getting profit, so that profit will be divided into three parts. First part is dividend, which he will pay to the shareholders. Second part is corporate tax. Out of that profit he will pay some tax to the government. That tax is called corporate tax. Income tax is different, but when a business is getting some profit, earning some profit, then that businessman has to pay some tax. That tax is called corporate tax. Okay, and third thing is retained earnings. It is also called savings. So out of that profit he will pay some tax, he will pay dividend to his shareholders, and he will put some money for future, which is called savings in layman language, or it is also called retained earnings in economics language. Okay, so these first three are the income from entrepreneurship, and the fourth one is income from property. Okay, so by adding these we will get operating surplus. Now the third thing is the people who are self-employed, who are running a small shop, so their income will also be added here. So we calculate in form of mixed income. Okay, so after getting all these three headings which are in yellow color, we will add these: compensation to employees, we will add operating surplus, and we will add mixed income. By adding these three we will get NDP-FC, or domestic income. Okay, and after getting domestic income we will add NFIA, net factor income from abroad, and finally we will get NNP-FC, or national income. Okay, so this is the second method in which we are adding the incomes of various sources of various people, and then we are calculating the national income. So all the three methods are important for your exam. Okay, first method we have seen value added method, second we have seen now income method, and tomorrow we will see the expenditure method.